All right, guys, in this Academy video, we're going to be covering gaps. So if you look throughout your charts, you're going to notice at times that you literally have a gap in price, like an empty void. So in this video, I'm going to show you, explain what that means, what it is, how we can play it, and I'm going to show you examples and leave you off with that. Now, you'll notice if you're trading an instrument, it's usually NQ or ES. Now, you'll notice when you're trading, you'll find these gaps, and a lot of them typically happen overnight, especially if you're trading instruments like SPY. I know a lot of people like to trade SPY and QQQ. You'll notice a lot of the times they'll gap overnight. Part of that is because the futures market, but anyways, you can notice that every time we have this gap, price will typically go through it. Now, if you're trading futures like NQ or ES, you will still have these gaps, but they usually go by different terms. If we go over to Google and we type in gaps in stock trading, you'll notice here's more examples, just kind of what that is. A gap is literally how it sounds like. So I think you guys got that part pretty straightforward. Next, let's dive into some different terms with the gaps that are associated. So with gaps, you can call it whatever you want. Typically, this is just a boring name, right? It is a gap. Now, a technical name, especially if you trade ICT, is going to be NWOG and NDOG. And I'm going to show you how to find these and what the difference is. NWOG is going to be a new week opening gap. NDOG is going to be a new day opening gap. Now, one more term that we can throw in here, we're not going to use this for this video, is going to be fair value gaps. Now, I did make a video on fair value gaps. Go check that out. But fair value gaps are a little bit different. Fair value gaps are gaps that you'll see, inside a price. So right here is a fair value gap, right? That's not as clear of a gap, okay? That's a gap between two candles. That's not a pure gap. There's still a candle that runs through this gap. Versus here, this is a lot more pure of a gap, and this is what we're going to be focused on today. So we can go ahead and eliminate fair value gaps out of the equation. Now, when you're looking for gaps, NWOGs, NDOGs, all the same thing. When you're looking for these, there's certain times of the day that you're going to notice this as well. And that's why we have these terms, right? So typically when we go from Friday to Sunday on the futures markets, you'll see a gap form. So here's a perfect example. Look at the time here at the bottom. Friday at 3 p.m. That's when the markets close at the end of the week. And then they reopen Sunday afternoon. In between that time, you typically will see a lot of gaps form. This is an example of an NWOG. This is no different with NDOG, and I don't think I need to show you an example, because with NDOG, it's the same thing. At the end of the day, the market closes for an hour, and then it reopens an hour later. You'll notice that a lot in the futures markets. With that, that's going to give us our NDOG example. So NWOG and NDOG, they're basically just gaps in price. Now, why is all this worth the damn? What's the point? Why are we diving into gaps? I'm going to show you why. You will come to find out that gaps, majority of the time, 9 times out of 10, will typically get returned to. And that's the beauty of gaps. See this example here? Boom. Look at that. Okay? They almost always get returned to. And look at this. We formed another gap here. This is another NWOG. Let's go ahead and mark this out and play this out. Boom. Went right through the gap. Okay? So in this example, we ran up to the gap, took it out. Then we went down here, created a new gap, took it out, and then and so forth. And you'll notice these gaps form nearly every week. It's hard to say every single day, but you'll see them very, very often. So let's go back on the chart here. Let's find some more examples here. And everything counts, right? Like this is a gap right here from Friday to Sunday. It doesn't look very big because I'm on the higher time frame. But if we were to zoom in, go to the 5 minute, see this gap right here? Right, so price closed Friday afternoon, right? And then the weekend happened, and then Sunday afternoon we opened back up, and it left this gap behind. Maybe something happened overnight, who knows? Typically you'll see price do that. A lot of times you'll see some of the biggest gaps too when there's like big world news. I know as of recently there was a conflict between US and Iran and Israel, so that may cause bigger gaps to form overnight. But again, the beauty and the beast of gaps is that you can capitalize on them, okay? The beast part of it is that it's typically a pretty big void for price to trade inside of. But the beauty of it is that it gives you an easy price target. So you can target towards gaps, or you can use gaps as areas to look for setups and then enter a trade. So that's the gist of gaps today. Gaps are pretty straightforward. Just don't confuse like regular plain sight gaps with fair value gaps. Remember, fair value gaps are more involved inside of the price, right? Inside of the candles, like right here, again, fair value gap, right? And you see how price respected it right there. And then you also have true gaps, which is visually you see a gap in price on the charts. This is money. This works if you're trading options. This works if you're trading futures, whatever you want to trade. Gaps are valuable. The theory behind gaps is that it's a gap in price. There's a lot of shares, liquidity, orders left inside of there, so price wants to return home later to come and grab it. That's all I got for today, guys. Make sure you like, comment, and subscribe, and check out the Future Academy videos to get your brain right and ready for trading. Take care, guys.